Alrighty, so slightly afternoon. It is 12:02 on Tuesday, the 14th of November. A whole bunch of people in. In fact, I see even more people. Probably got about another 20 or 30 joining even as I speak or connecting to the platform. So there's a whole bunch of people in here today. I guess before I run through charts, one very quick question. Who is in here today that has never seen me do a webinar? If anyone is like, yeah, this is the first time I've ever seen you do a webinar, let me know. My gut feel is, I mean, I'm seeing a whole bunch of familiar names, so I'm guessing that most of you have been into at least one or two of these webinars. So what I'm going to do is this. What I used to do with public webinars is I would make them very, very, should we say, different. In other words, I would do a webinar very differently from what I would normally do in terms of my Tuesday and Thursday webinars or indeed the morning videos. I don't do that anymore. As far as I'm concerned, I do a public webinar very, very infrequently now. I'm only going to do what I would typically do on a Tuesday, Thursday. So I'm not going to go through anything that I would normally go through or I would not normally go through. I'm just going to run through charts as if this is a regular webinar, okay? If anyone has questions as we go through, like why are you looking at this or can you explain something, then just type it into chat. I've got no problem answering questions, but my focus right now, or my priority right now, is simply on extending what we've been talking through every single morning over the last several weeks and the prior Tuesday and Thursday webinars. So I'm just going to go as if this is a regular webinar. That being said, let's go. So I'm going to go through this in the traditional order that I've been looking at recently. Dollar index treasuries are up first. 30-year treasuries. So if you recall, and again, when I say things like if you recall, I'm aiming this at members who are in here, and well, you know what you should be recalling because I've been saying it every day. Those of you that are not members are thinking, well, how would I recall it? This is the first time you've said it. Look, I've been saying to look for resistance up here. I said to look for support down in this area here. Let me go back even a little bit further. Let me just take a little bit of a step back in terms of treasuries. So treasuries have seen support at 152. Once, twice, 3, 4, 5, 6, about 6, 7 times. We even saw another bounce at support 152 in this area here. What I said back in the second, third week of October is I thought we would take it out to the downside, which would not bode well for gold, purely because we've actually, in the last 12 months, had a pretty solid correlation, a direct correlation between what's going on in 30-year treasuries versus gold. Once we took out 152 to the downside, what I started saying in this area here was, I'm now nervous of a move back to the upside in 30-year treasuries. And if I'm honest, it's not based upon anything technical. It's based upon the fact that everyone and their granny is paying attention to 152. We even bounced off of it back in July. Again, all the way along here, 152 held just perfectly. So 152 finally breached. The problem is, as I said, everyone and their granny is now saying, oh, look, Treasury's just breached support. We're probably going to go into the 140s. So what am I therefore looking for? Well, think about it. You've got all the sheep saying, we just took out support, down we go. Therefore, I'm looking for a move back to the upside. And what I said was, and I believe it was actually a Thursday, so I'm guessing it was, I can't really tell what weekdays these are, but I think it was kind of in this area here. I started saying I'm very nervous of a reversal back to the upside in Treasuries, which obviously worked out quite well. We took out 152 to the upside, and what I said then was I would look for one of two things. I would look for support at 152 or to see whether we would breach back to the downside. 152 became pretty much perfect support in this area here, and therefore my motivation is now back to the upside. And what I said was, back in the early part of November, I would now look for resistance around the 154.14 area. I remember the price distinctly, and there it is, 154.14. We had a near miss, so a bit of a pullback, and then we spiked through it. Or did we? Think back to what I said on the 7th of this month. What I actually said was, when this line was not here, and we had treasuries looking like this, back on the 7th, 8th of this month, what I said was, we have not taken out resistance. And even though for my own personal trading / charting, I wouldn't normally have to draw in this line, I know a lot of people like me to draw in this line, so I will do so. And I will simply say, why do I not think we've taken out resistance? Well, just look to the left. Look over here. All you got to do is draw yourself in a line from the prior high. Have we really taken out resistance? No, we had a flush previously back in the middle of October, so therefore, as far as I'm concerned, we're still sitting at resistance in treasuries. If treasuries start to see a bit of a push back to the downside, that obviously does not bode well for gold. And sure enough, we've got treasury seeing a bit of a push to the downside, gold seeing a bit of a push to the downside. And what I said was I would look for support at, no shocker, 152. And of course, we got the bounce at 152. So we have a support 152, 152. It's just worked numerous times. And what I said this morning was, I'm really just watching treasuries now to see whether we see a push to the upside in treasuries and downside in dollar index. I've been leaning higher in... let me rephrase that. I've been leaning lower in dollar index for about the last maybe 3 to 5 days. And we'll get into why that is in relation to the euro and the Swiss franc. But for me, I'm looking for a move lower in the dollar index. And what I said this morning, in fact, I'll go over to the chart right now, was, in fact, I drew in this blue line right here about 7 o'clock this morning and said, that's what I'm looking for in the dollar index. I think the dollar index will take out support to the downside. And when I say support, what I'm talking about is 94.10, which is this line right here. And I'd been looking for a bounce at 94.10 at the beginning of the month, and that worked out incredibly well. So we got our beautiful bounce up into resistance. I then started becoming a bit nervous that what we'd done is hit a ceiling. In fact, the line's gone for some reason, but there you go. In fact, the arrow shows you where we'd been looking for resistance. Resistance, resistance, down we start to come. Get another bounce at 94.10, and bang, we've now breached it to the downside. And this is what I've been looking for. I've been looking for a downside breach in the dollar index, and this morning I was looking for a bit of a bounce in 30-year treasuries. And each of those should be helpful to gold. Think about it. You've got dollar index slipping lower. You've got treasuries working their way higher. These should be both helpful to gold. And yet, gold is still stuck in the 1270s. Something is going on with gold. And I've been talking about this for about the last... Apologies, got lots of people now. Apologies. I got actually a lot of people talking about they can't get into the webinar. The fact that we've got nearly 200 people in here tells me that, in fact, the webinars work. I'm going to put my phone on silence. Gosh, why people leave this to the last minute? Again, treasuries are bouncing, dollar is working its way lower, so gold should be working its way higher. It is not. Let's go and look at gold. What's going on in gold? So you can see what I was looking for the last, I don't know, several days. This, in fact, these blue lines here, just to be absolutely clear, I drew these blue lines in on, I believe, Friday morning. And any of you members that recall when I drew it in, feel free to say it. It was either Friday morning or Sunday. And what I said was, I was going to look to see whether we saw a flush below the 1272 in this area here. So what I said was, just be careful that we don't see a flush below 1272 and then a reversal back to the upside. And that's pretty much exactly what happened. It happened this morning. Well, yeah, it happened very early this morning. There it was. There was the flash this morning. And what I talked about in morning analysis this morning, around 6, 7 o'clock this morning, was I don't buy into this. I do not buy into this move to the downside. Purely because if you think about what's happened, we've actually seen a move below 1272. Everyone, I like using this phrase, but everyone and their granny again is going to say, okay, gold's taking out support over in this area here. I want to be short gold. Okay, you're short gold. Now what's gold more likely to do? Well, all the sheep are short in this area here, and bang, up we go in gold. In fact, we saw a pretty decent push to the upside. So what I talked about this morning was there are two key levels for me, 1272 and 1281. I'm not going to go through the long history of 1281, but let's just say we've been paying attention to 1281 for about the last month. And if you wonder why, look to the left. Depending on how you want to count it, 1, 2, 3 touches, a little bit of a gap, but a touch, a flush, but look at the close, a touch, pit perfect, a bit of a flush, a touch, support. And in fact, we started to become more bullish gold in this area here. I'm not going to gloss over things and try and hide things. We did. I became a lot more bullish in gold. And when we were in this area here, I said, okay, things are looking a bit more positive. The resistance that we had at 1281 now looks like it's support in this area here. But we need to hold 1281. We do need to still hold 1281. Well, obviously we didn't. We saw the, I don't know what you want to call it, fat finger trade, the 4,000 contract or 4 million ounce trade in gold. Down we go back through 1281. But what I said on Friday and Sunday was, I don't buy it. I don't buy the fact that this is bearish for gold yet. Because if you look, this is where gold belongs. And this is where we're flushing up into. Okay? So I talked about this in detail this morning. But think about it this way. Every time we try and get above 1281, we come back down. We come back down. We come back down. So in other words, we belong here. And we keep trying to visit up into here. So what I hypothesized over the weekend is, well, look, we actually have seen now gold morph back up into the 1280s. So I'm going to look now to see whether it's the opposite, whether now we belong up here. And what we're going to see is a move down and a reversal back up. a move down, a reversal back up. Early days yet, and what I actually said, I believe Sunday, and again this morning is, if we see resistance at 1281, I'm going to become a lot more nervous because that would effectively turn things into a shoulder, a head, back to a shoulder. So we've got a real mixed message in gold and silver right now, specifically in gold. Bullish would be the fact that, again, I'd look for a flush below 1272 right here. This was on, again, Friday or Sunday, and we got it. Pit perfect. Well, pit perfect. How can you have a flush that's pit perfect? We flushed and we reversed straight back up above. That's exactly what I was looking for in gold, and it worked out beautifully. Here's the problem. We're still holding at 1281. So all of that being said, if someone put a gun to my head, do I think we're going higher or lower? Well, the answer is higher. Why is that? Well, if we look at just a 240-minute chart in isolation, I'd find it very difficult to come up with a direction, because if you think about it, this morning we saw a flush above 1281, we saw a flush below 1272, they cancel each other out, so as far as I'm concerned, we're probably going to have status quo and just continue in the range, which is 1272 to 1281. But that's just looking at the 240-minute chart. Let's go and look at the daily chart. And by the way, I apologize if I'm just like flying through charts at 100 miles an hour. But as I said at the beginning of the webinar, I'm doing this as a regular members webinar. Most of you guys that are members have seen these charts every single day, and all of this is very, very familiar. For those of you that, well, haven't done that, Greg, I'm about to disconnect you. What is a line? So gold on a daily chart. Let me get back in. Gold daily chart. We've been looking for support here. And let me just zoom out for perspective. Okay. So this is perspective. Steve says you're going at the right speed. Great. So look, we've had a downtrending channel in gold. Bang. 1, 2, 3, 4. So we've been working all the way through 2014, 13, 14, 15, into the beginning of 2016 along that channel. Then we had resistance, resistance, resistance at 1 become support at 2. We have bullish context. We look for a move to the upside in gold. Up we go. Where would you look for resistance in gold? In fact, let me just zoom in a little bit. Where would have I looked for resistance in gold? I would have looked for resistance right here. I don't know where that line's missing, but there should be a line there. There should be a line pretty much right about there. And you can see resistance, 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 resistance. We looked for resistance. We got resistance. Now I zoom in. We've got resistance. Now it becomes support. And what we looked for was we looked for support in gold here. And what I said for about probably the last month, maybe 2 months, is on the daily chart, you've got to think about it this way. Let me drag the lines over. We have a channel. This is gold in the original channel. Remember when I said 1 and 2? So this was our original channel. We breach to the upside, get resistance that looks something like this, and we come back down, see support in this area here. Remember I had the 1 and 2? Let's see if I can do this. There's your 1, I think. Oops. There's your 1. You know, I've got to learn to type quicker. And there's your 2. So in terms of what is our context in gold, it's very simple. Resistance has become support. So am I looking for a move lower through the line or higher through that particular line? Well, obviously I'm looking for a move higher through the upper of those 2 lines. So I'm looking for a move through this line to the upside because we have bullish context. If anyone's confused, type something into chat and I'll try and respond. So that's what's going on in gold. And again, what we've done is resistance became support, resistance, 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 resistance. So I am looking for a breach of this line to the upside. And I think I talked on my last public webinar and said, yes, I actually do ultimately think we will breach this to the upside. Did we? Yes, we did. We breached it in a pretty spectacular fashion. We moved up from basically 1200 to 1360. When we reverse back to the downside, where am I looking for support? Well, unsurprisingly, right there. Do we get a bounce? Absolutely. By the way, I will draw a line up in this area here. I think I had it there a second ago and I just moved it. So on the daily chart, long term, like looking out weeks and months, I remain bullish. We have bullish context. Nothing has changed. Not only that, but look at it this way. Look at our support here. Now look at our support here. Now look at our support here, which, by the way, we were looking for at the end of October, down around the 1265 area. Worked out beautifully. 1265 took us up to 1290. What does that formation look like to you? I'll give you a clue. There's a shoulder involved there and there. Well, it's obviously a head and shoulders. So I'm looking to see, can we take out 1281 to the upside? If we can, I'm going to be looking for a move up to probably about the 13, kind of like 40 area in gold. But back to the 240-minute chart. What we were just looking at on the daily chart is the tide. So I think the tide is headed in a certain direction. That doesn't really help us if we're trading the waves, and the waves of the 240-minute chart. So all I'm suggesting is, back to what I said, do I think we're going to take out 1281 or 1272? I'd probably lean towards taking out 1281 purely because of what I'm seeing on the daily chart. So hopefully I've covered gold to the point that you're all fairly comfortable as to at least what I'm seeing, which is that 1281, 1272 are the key levels. If we take out 1281, I'll watch for it to become support for a leg to the upside. It's really that clear, which is basically what I looked for last week, which we got until someone sold 4,000 contracts of gold. But again, I'm not convinced. So what's going on with silver? Silver's a bit more worrying. Let me zoom out. It should look relatively familiar. There's your channel to the downside. There's your breach right here. When we fell back to the downside, where do we find support? Oh, look, we found support where we previously had resistance. Up we go. And by the way, that was it right there. Up we go. So we now see silver moving to the upside. But what you can see I'm also paying attention to, in addition to our primary blue slope, is I'm starting to draw in maybe a newer slope, which might show a slightly less steep slope. Support, support, resistance, resistance, resistance. So that's another one I'm starting to pay attention to. But just for a minute, pay attention to our original slope with resistance, bit of a flush. So let's zoom in. When silver rose up into around about the 1740 area, right here, 1745, I remember on this particular morning, I said, okay, we've hit a line of resistance. I'm not sure whether I'm really going to believe in it too much just now, because if you look, have we abided by this particular line of late? The answer is no, not really. We kind of like flashed up above it, so I'm not going to pay too much attention to it. But what I said is, if we do see a pullback from it, then obviously I'll pay attention to it next time. Well, you know, those words came back to haunt me because that particular line worked out beautifully. 1746 gave us a rejection all the way down to about 1660, so we came down pretty much a buck. And when we reversed back to the upside, this I was watching. And what I said was, I am very nervous, silver, until we take out 1730 to the upside. Well, you can see what happened. We tagged the line pretty much pit perfect, topped at 1727, 3 pennies shy of that 1730, and then we fell back like 50 cents. Nothing to get too excited about. I think what I'm going to watch for is this. I am, because of what's going on in gold, still going to be looking for the evolution of an uptrend. So what I will watch for, so this will be a modified shift. And if anyone's curious as to why I'm saying modified shift, it's because a trend line is a modified shift. Again, if you're confused, type something in and I'll tell you what I mean. But effectively, if you draw a trend line, it is a modified shift. It is the slope of a modified shift. So there you go. There's your modified shift. So to me, what's going on in silver right now is a little bit more worrying than gold. And all I mean by that is, until we take out this line of resistance up above, I'm a little bit nervous. We're in a wedge. There's your ceiling. There's your floor. Until we get out of this wedge, I'm a bit more nervous in silver. In gold, well, the thing that would make me nervous in gold on a daily chart, bearing in mind I've just said long term we have bullish context, what would make me nervous on a daily chart? It's pretty much what I talked about on the 240, which is, if I can draw a circle instead of a line, what would that look like? Head and shoulders. We've got to take out 1281 to the upside. It's basically that clear. Got to take out 1281 to the upside. Back to dollar index and treasuries. Treasuries, we're bouncing from 152. Typically, that should indicate a leg to the upside in gold, but we're just not really seeing it this morning. Well, we saw a bit of a bounce, but nothing too significant. Dollar index, we're pretty much diving. Each of these should be very, very helpful to gold, but for whatever reason, gold just isn't seeing much movement to the upside. And despite the fact that I've already had at least 2 emails saying, oh my God, look at the move that we just had in gold, think about it. What has gold done this morning? Really, what has gold done this morning? Nothing. Absolutely nothing. I posted in metals trades about 2 hours ago. Until we take out 1272 to the downside or 1281 to the upside, all I'm seeing here is noise. And that's exactly what we have. We have noise. I know some people are getting very excited about gold, but to me, we've got to go another few bucks. We've got to go up into about the 1283 area and stay there through Asia before I start to become a little bit more confident in gold. So that's dollar index, treasuries, and gold and silver. And I want to go on now and look at like the euro and the Swiss franc, purely because I've talked about the dollar index and how I was looking for a move to the downside in dollar index. And I want to talk, well, why is that? If you look at a vehicle in isolation, dollar index, then you might, let's go back to the dollar index. You might go back to the dollar index and say to yourself, well, okay, we hit resistance. There's your resistance. So you might expect a bit of a pullback, but this is an uptrend. This is an uptrend that we're in. Let me just be really clear here. This is the uptrend that we're paying attention to in the dollar index right now. So that's what I'm watching the dollar. Whereas the next place I'll watch for support, well, probably somewhere down in this area here. But the point I'm trying to make is, okay, we hit resistance, we hit the ceiling, then we had a double tap in this area here. So I might look for a bit of a pullback, but probably nothing too significant. So why is it that I was looking for a downside breach in the dollar index this morning? In fact, for the last several days, in fairness. It's because of what I'm seeing in the euro and the Swissy. Look at the euro. So here's the downtrending slope that we've got going on in the euro right now. And what I said last week was I would look for support. In fact, what I said, it looks like back here, is I would look for support down in this area here, and you can see how well that worked. We actually dropped down to the 1550s, and what I said middle of last week was, I'm actually nervous now, Swiss franc to the downside, euro to the upside, and I'm watching for the euro to see a move to the upside, and if we do see a move to the upside, what I need to see is the euro breach 1665 in this area here, 1668, 1665. And if we take out 1665 to the upside, which I've been talking about and saying I think we will, where do I think the euro is going to go? I think the euro is going to go to this area right here, which is the ceiling of our downtrending slope. Now let's get all the circles out of the way. And you can see that we've already popped up and tagged that particular line of resistance. Does it mean I'm short the euro? Absolutely not. What it means is I'm going to be watching to see if the ceiling holds for something like this. So I will be watching the euro to see if we hold at resistance. But the move from support we flagged last week at 1550 to where we are right now is basically 220 pips. So the euros work beautifully up into resistance. And if you are long, this is absolutely a place to take some profit as far as I'm concerned. So conversely, what's going on in the Swiss franc? So Swiss franc, uptrending slope, working absolutely beautifully. Not only was it working beautifully, but back here, when on the 27th I said to look for support down in this area here, it worked great. Up we go, but where do we top? We top at prior highs. Let's try and get all these circles out of the way. For those of you that haven't been on one of my webinars for a long time, you'll probably recall my addiction to drawing circles on charts. I have to see a therapist about it. Anyway, down we come, our resistance becomes support, up we go. But now look, we start running into horizontal resistance. We come back to the downside. Now we get some very volatile bars in this area here. And what I said is, I'm not going to suggest that these are immensely tradable bars. But what I did say is, they don't change anything as far as I'm concerned. People get so excited when they see the low of a bar. They see the low of the bar there and they freak out thinking that we've just breached support, or in this area here. If I've said it once, I've said it 500 times in the last year. Watch the close on the bar. So this bar closes up here. This bar closes up here. I'm always much more interested in the close than the low. Think about it like a trampoline. The bar pops to the downside and closes all the way up in this area here. Pops to the downside and we close all the way up in this area here. So as far as I'm concerned, Swiss franc, nothing had changed. And you can see even back on the 3rd of the month, I was saying that's the place to look for support. And again, look, support all the way along here. If you don't think this slope's working, well, it is. Here's the problem. And the back end of last week coming into the weekend, what I started saying was, you know what? We still have support. We have a risk reward that's going against us. Think about it. If you're long here, where are you going to be taking profit? You've got to take some profit up in this area here based upon the prior two highs. So the problem is, as this wedge comes towards a point, your risk reward is against you. And so what I actually said was, because of the fact that I've got the euro bouncing from support, remember, back in this area here, this is the 7th of the month. Look at this, 7th of the month, we're bouncing from support. Because we've got the dollar index sitting at resistance, the 7th of the month. Therefore, on the 7th of the month in the Swiss franc, which is right here, are we still at support? Absolutely. Would I take it? Absolutely not. Because we've got the euro bouncing, we've got the dollar index pulling back from resistance, and what I actually said last week was, or early part of this week is, actually, sorry, this is a week ago. What I said last week was, I'm actually nervous the Swiss franc to the downside. And that's what I said. I'm nervous Swiss franc taking out support to the downside because of what I'm seeing in terms of the euro and the dollar index. We went sideways, and then finally we got our breach. Full-blown breach of support. And what we looked at again this morning was the fact that, in fact, what I'd said, I think probably Sunday, I would now look to see if we get resistance in this area here. Whereas what you can actually see has happened is we saw a bit of a pop to the upside. And actually yesterday, And I looked at this yesterday afternoon. So we got support becoming resistance. What does that tell you the Swiss franc is likely to do? Well, it's likely to do this. Greg says, would you take the short on the 13th? You tell me, Greg. You know whether I would take this trade. Oh no, actually, you may not because of the euro and the dollar index. Okay, I'll give you credit for that one. No, actually, I probably wouldn't, Greg. So Greg is asking a question, which is, would you get short the Swiss franc on the 13th? And I think he probably means in this area here. Would you short the Swiss franc in this area here? Me personally, I probably wouldn't. The problem I've got is if I'm getting short around 99.80, I'm looking at a stop probably up around this kind of area here. So my stop is like 40 or 50 pips away. That's kind of a little bit too big for me where I'm trading against the trend. So no, I probably wouldn't, Craig. I probably wouldn't have taken a short Swiss franc. And then that normally has some people thinking to themselves, well, hang on. If, this is all very good. This is all very good. You've got an uptrend. You breach it to the downside. Your support here becomes resistance. You start working your way lower. You think that that's going to happen. In fact, what I've said for the last few days is this is the place to look for support in the Swiss franc. This is all very well and good. But if you're not going to take the trade, what use is this? What use is this chart if you're not going to trade it? If anyone actually thinks that, please say so. Please say, yeah, I got a problem with that. If you're not going to take the trade, what use is this chart going to be? And if you think this is a loaded question, you're 100% correct. Think about it this way. Supposing you are contemplating a short in the dollar. Supposing you are contemplating a long in the euro. You've got the euro, the Swissy, and the dollar all correlated or inversely correlated with each other. The point I'm trying to make is, if you see something in A and B that confirms what you're seeing in C, how is it of no value? It's of tons of value. If I'm seeing the Swissy falling from resistance, and again, I will watch the Swiss franc down in this area here. If I'm seeing the dollar index falling from resistance, which we did a double tap up in this area here, and more to the point, we have now breached through support around the 94.10 area, then all of this makes me much, much more bullish in the euro. And obviously, as I said, the euro has popped to the upside and now tagged resistance. So for me, analysis has two values. In itself, as in terms of providing me with information that I can trade on that chart, on that native chart, but additionally, it gives me information that I can use on a different chart. So in this instance, the Swiss franc falling tells me to look for the euro to be rising, and well, there it is. Euro's risen up, I'm now watching for resistance. Swiss franc is falling. Having said that, we have not yet hit support. For me, I'm still looking for Swiss franc to go down to about 98.70, about another 30-40 pips. So that's the euro, the Swissy, and dollar index. I hope that was useful. Gosh, 30 minutes and that's all we've done. Let's go through CAD and Aussie and Kiwi. So Canadian dollar. So if you recall, the Canadian dollar is almost identical to the Swiss franc. We have an uptrending slope, beautiful uptrending slope. We turned bullish Canadian dollar a long time ago. Up it goes. And by the way, we also turned bullish crude oil recently, although the last 24 hours I've actually turned nervous energies, but regardless. So resistance becomes support. 1 touch, 2 touches, 3 touches, up we go. Where do we run into resistance? We run into resistance at the horizontal. This is identical to the Swiss franc. Okay? Your risk reward is against you. We're waiting for a downside breach. We get the downside breach. At the time, I then said, let's wait and see if this becomes resistance. Same as Swiss franc. We didn't get the reversal back up into resistance, to be fair. And what I said is, where am I going to look for support? Well, it's not too difficult. That's the place to look for support. Took its sweet time getting there from effectively the 3rd until about the 9th. Took 6 days to get down to support. But look what happened. We came down, we hit support. We effectively spent the whole of the 9th and 10th just grinding up support into the weekend, and then bang, up we go. So you move to the upside. As of this morning, when I posted analysis, we were like falling from the highs. We were around like 127.40 and falling. And what I said is, the slope's working. So what would you look for? You would look for continued support. Where? Well, it's not a shock. That's the place to look for continued support in the Canadian dollar. And you can see that we've actually seen a push to the downside, and we've tagged it pretty much bit perfect. And we've gone up from 27 to 27.73. So call it 70 pips to the upside. So this slope is still working. I mean, there's nothing wrong here. Obviously, this is indicating bearishness or weakness in the Canadian dollar. This is an inverse vehicle that weakens as it works its way higher. I've turned cautious or bearish energies about 24 hours ago, to be fair. So we've got Canadian dollar at support and rising. Canadian dollar is relatively well correlated with crude oil inversely. So crude oil to the downside, Canadian dollar to the upside. In other words, both are weakening. So Canadian dollar, I'm a bit nervous to the upside, i.e. a weakening. Australian dollar, we'd been looking for resistance in the last 2 weeks in this area here. In fact, you can see here back on the 29th, I said that's the place to look for resistance in the Australian dollar. We popped up, we tagged it once or twice, depending on how you want to count it, fell back, hit it a second time, fell back, hit it, well, I say hit it a third time. I started to become a bit nervous Australian dollar, those of you that recall from last week. And what I said in this area here was I was actually a bit nervous Australian dollar potentially seeing a breach to the upside. And what I did was drew in the orange line and said if we take out 77 to the upside, as far as I was concerned, that would be a significant change. Well, we failed to do it by about 5 pips. Went to 76.95, missed the 77 by 5 pips, reversed lower, and instead it becomes resistance again. So what we have is resistance, resistance, bit of a flush, back to resistance, down we go. Australian dollar is now threatening lows that go back many months. So I'm looking at a weakening in the Australian dollar. New Zealand dollar, same story. Think about it. We'd looked for support in this area here. We came down, tagged it, 68.90s, saw about like a 90 pip move to the upside. But when we came down to this area, just think about this. And I talked about this in depth this morning. And what I said is, look, Kiwi has breached uptrending support. There's no question about it. So how much would you have lost if you had looked at the New Zealand dollar long? Well, actually, very little, because think about it. You'd have been taking your long. Friday afternoon's close was in this area here. There's your stop in this area here. Let's try and do that again. Stop in the end. You're looking at risking like, let's say 15 pips. But what else was at support Friday afternoon? Canadian dollar. Canadian dollar was at support Friday afternoon as well. And this one, you were looking at a risk of, I don't even recall, I think I said 20 pips this morning. So if you were trying to get long the Canadian dollar, long the New Zealand dollar, bearing in mind they're inversely correlated, you cannot cherry pick. You cannot say to yourself, well, I think the Canadian dollar is going to breach, so I'm going to not take that and I'll take the Kiwi instead. Bad move. And it's equally a bad move to cherry pick and take just the Kiwi and not the CAD. If both of them are validated slopes, you take both of them. Don't cherry pick. You take a long Kiwi, you take a long Canadian dollar. And if you did that, you would have lost 12 to 15 pips in the Kiwi, and you'd be a happy camper in terms of the Canadian dollar. So no cherry picking. And again, I know I'm kind of brushing over this, but I spent like 15 minutes talking about just this one issue in this morning's video. So hopefully everyone's up to speed on it. Japanese yen is correlated to US equities. So all I'm going to watch for in Japanese yen. If you recall, I said we had a massively bearish bar in Japanese yen. Remember this? I'd been looking for resistance back in October, up around 114.30. We popped up, we tagged it, saw a bit of a flush above 114.30. The reason for this blue line is me doing the whole everyone and their granny wants to get long the yen, because if you look to the left, 114.30 has been resistance once, twice, 3 times. So again, you take out 14.30 to the upside. Everyone's like, great. The yen's going to the moon. Let's get along the Japanese yen. And look where we close. Yes, this is a bearish close. In fact, if you want to see in a textbook or an encyclopedia, that should be the picture for a bearish close. This is a bar that goes from 114.70 down to 113.70. It's a 100 pip bar, and we close, let's have a look here, we closed at 71 and the low was 69. We closed within 2 pips of the bottom of the bar. That is about as bearish as you can get. And so what I said is, if we go back to the upside, I'm going to be looking for further resistance at 114.30, and I will be surprised if we do not test 112.95. I'll be surprised if we actually don't test it, purely because of the bearishness of this one bar in this area right here. Time is ticking. Let me jump up and look at some commodities, because I know that some of you are wanting me to look at commodities. Palladium, I'm going to run through some of these metals real fast. Palladium, Greg, you still in it? So Palladium, I've been looking for support in Palladium in this area here, which is around 942, 943. Well done. Kudos to you. So let's put that line back in. I'm not sure what line I just removed. So you can see what I said back here, which is back in the middle of October, is I would look for support around 943. This is a line that had previously been resistance, resistance, resistance. We pop up back up through it. It became support. We even got a second, not quite a touch, but anyway, up we go. And this is no different from than euro. Think back to the euro, and what I said in the euro is if we take out resistance on this horizontal in this area right here, I'm looking for it to pop up to resistance. So in Palladium, it's basically the same story. If we can punch through this horizontal right here, which is around 1004, I'm going to look for it to pop up to resistance. And let me zoom out. There's the slope in Palladium. And so what I've been looking for the last several weeks is 1024. We popped up, tagged 1024 on the nose, and before someone says, would you get short palladium in this area right here? No, I wouldn't. Myself, I would not. I know someone called Greg would, because he did, and he's probably a very happy camper. Because we've gone from 1024, and we've been down into the 974. So we've been down $50 from that resistance. And where am I looking for support? I'm looking for support down around 953. So to me, 953 is the place I'll be watching for support. I will express a bit of caution, and it's simply this. We're in an uptrending slope. So I think it's great that we've actually got this beautiful $50 pullback from resistance, but I would not be ignoring the fact that we are in an uptrending slope in palladium right now. Resistance became support. Now our floor is here. Now our floor is here. Now our floor is here. So it's bullish, bullish, bullish. We're just stepping up and up and up. So anything that we're seeing in terms of a pullback, it's great, but just I would tread very, very carefully. Greg says, if we get 953, would you go long? Yeah, I would. Put it this way though, Greg, it's a bit like what I said this morning when looking at charts. When I say something like I will look for support around 953 or 54 in this area here, it doesn't mean I am going to say to myself, well, let's just put myself in a limit order at 954 and we'll see if that triggers. What I will actually do is what I say. I will look for support. So what I would like to see is, for example, I would like to see the first bar to hit support. I would like to see a close, something like that. I want to see a close above support. So I'm looking for evidence that we actually have support. And once we see support, then at that point I would be looking at subsequent bars. It's no different from what we had in this area here, where we came down, tagged the line, bullish close, and when we come back down on the second entry right, or second bar in this area right here, this is where I'm looking to get long. That's palladium. Copper, if you know, well, you know what I'm looking for in copper. I'm looking for 299. Copper has worked out stunningly well. As most of you know, I'm looking for copper to about 360. I've been bullish copper since 2016 back in this area here. And if you're wondering why, it's actually based upon, I believe it was a daily chart. Let me zoom out. Okay. I'm looking for support around 299. Let me zoom out though. This is the fork that I started paying attention to back in 2016. And by the way, these blue lines, those of you that are members, go back and look at what I said about copper at the time. These are not blue lines that I just drew in this morning or last week. These were drawn in contemporaneously. I was looking for support back in August. We tagged it in September. Pip perfect. Look at the bullish close. I said, right. And in fact, I remember at the time people saying, oh, I missed the entry. Now what do I do? And I said, well, you know, you've still got to watch this line. That was in the early part of October. We came back down, had about 3 or 4 bars at support. This was down at 208. And look what happened. And by the way, same question. And this was on a public webinar. I recall a public webinar back in this era here. This is back the end of last year. Someone said, well, great, but, you know, I'm not long copper. Now what do I do? You know, I don't want to wait for copper to go all the way down into this area here. And I said, well, you know, maybe watch to see whether the upper parallel becomes support. We actually did get support back in November, so maybe watch for support here. Look, we come down. Look at the close on the bar. Look at the close on that bar. We come back down, second touch. Look at the close on the bar. We actually had almost a third one. Look at the close on the bar. The close on the bar is so instructive, okay? Greg says the trigger was on the 240. I think you mean in relation to copper, and you're 100% correct. We were looking at the 240-minute chart, which I may not still have, but I'll look for it. No, I don't still have it, I don't believe. I actually had lines on the 240-minute chart, which triggered what we were looking for on the daily chart. And you're absolutely correct, Greg. What we actually had was, back in this period here, we actually had a bullish change of behavior because we actually had a line of resistance that looked something like, you know, it was something like that. And I think we were stepping higher on the 240. You know, we had that type of a thing going on I think we might have even had another line in this area here. We had something like that. We saw it stepping to the upside on the 240, jumped up to the daily, and that's what flagged what was going on the daily chart. And like I said, we really haven't looked back since then. And again, you know, looked for support in this area here, and we came down, tagged it once, twice. This is back in September of this year now. This is just a couple of months back, and bang, up we go again. I'm looking for support down around 299. Sorry, I really didn't mean to spend so long looking at copper. It's very difficult because I'm conscious that we've probably got like nearly about 160, 170 people that are not members, and you don't want me to just gloss over a copper chart because I've looked at it every single morning for the last year. You want me to talk about why have I got lines where they are. The problem is if I did that on every vehicle, we'd be here till about 5 o'clock. I'm going to run through the rest of the commodities just a little bit quicker. In fact, where are the energies? Apologies, energies. So oil, I became a bit more nervous to the downside in energies this morning. Nat gas specifically. I'd looked for support this morning in nat gas around 3066. That's looking pretty good actually. I want to see whether that works, but it's looking pretty good so far. You can see we came down, tagged the line, and we've seen a bit of a bounce. This is an action-reaction line that we've been paying attention to since, I think, September. Support, 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 support. Became resistance, 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 support, and I'm going to be looking for support pretty much where we are right now. So nat gas, I became a bit nervous to the downside in nat gas. We also hit resistance on the weekly chart. Oil. Again, we've been bullish oil, uptrending slope in oil, which has been working for God knows how long. Support in this area here works stunningly well. Up we go. We hit resistance. This is crude inventories last week. We hit resistance and down we come. And what I was looking for this morning was I was looking for support in this area right here in crude oil based upon 1, 2, 3, 4, 5 touches. And well, let's wait and see. I'm watching the close on this particular bar. So again, I was nervous to the downside in energies this morning. Nat gas saw a nice dip, hit support and is bouncing. Crude oil saw a nice dip, hit support, and well, let's wait and see if it's bouncing. Heating oil, again, I'm looking for support in heating oil down around the 185 area. Gasoline, again, I'm nervous to the downside in gasoline because we hit long-term support, which I pretty much guarantee no one is looking at. If anyone knows where that line comes from that's not a member, kudos to you. But regardless, we hit the line. And what I said at the time was, I don't trust the line unless we get a pullback. And then if we get a pullback, I will watch for it to continue working. And, well, we're getting a decent pullback right now. Softs, real fast now. I'm just going to bang through these. Cotton, I still need to see whether we can take out 70 to the upside. Cocoa, I've been looking for an upside breach in cocoa for about the last, how long? Like 4 months. We finally got it. And let me zoom out. There's your downtrending slope. We're moving out of the downtrending slope back in like May, June, July. And I'm looking for this to go on in cocoa. Finally, we have an uptrending slope. Start drawing in an uptrending slope. I look for resistance in this area here. I look for support in this area here. I look for resistance in this area here. This is just in the last 2 days, and you can see we're falling away from resistance beautifully. Cocoa is working incredibly well right now. John, if you're in here, I hope this is being helpful to you, and you're a guy over in Ghana? I think he's in Ghana. Brilliant. Good. Glad to hear it. Coffee, no opinion. Sugar, I'm waiting for an upside breach. Let's see what's going on in sugar. I think we're going to breach to the upside in sugar through 1518. This is no different from cocoa. We have a downtrending slope. We're trading sideways. I'm looking for an uptrend, or I'm looking for an uptrend in sugar. And what I've been saying is if we see a push to the downside, I will watch for support down here. But you can see that sugar's basically gone sideways. And now finally we're on the cusp of a breakout. We start taking out 1518 to the upside. Lumber is shockingly one of the best charts I've had in the last few months. I started looking for support in lumber down in this area here, July, August. So we saw a pit perfect touch where my arrows are. Saw a little bit of a flush, which doesn't bother me. I never get too worried about a bit of a flush. And what I said at the time, that for those of you that remember, is I'm going to watch for this. I'm going to watch to see, A, can we get back up into the slope? Can we fall back down? Can we find support for a leg to the upside? That's what I'm looking for in lumber. Well, look what happened. Pretty much pit perfect that. We rose to the upside, came back down, got one touch, got a second touch. That was my trade right there, and I got out right here. That was my target. My target was in this area right here, which is around the 418 area. So I ran it up from basically 370s to about 420. We saw a bit of a pullback from the target, popped through it. When we popped through it, and by the way, just to be really clear, this is the line I'm talking about. When we popped through resistance, this is back in the middle of October. What I said is I would watch for support of 420, 421. All of these blue lines that you can see are drawn in on the day that you see them. So if this is drawn in from the 13th of October, that's when it was drawn in. So down we come, tag support, up we go again. Where's the next place I'm going to look for resistance? Well, again, we've been talking about looking for resistance up around this area here, around 458. And you can see that we popped up, tagged it once, twice, and we're getting a bit of a pullback. I'm going to watch for support next in this area right here. This slope is just working incredibly well. Lumber's working great. OJ, I've got no opinion as far as I'm concerned. Where we are right now is no man's land. I'm looking for a move either to 200 or back to support, which is around 133. We've been paying attention to support in OJ throughout May, June, July, August, September. We hit it once, twice, 3, 4, 5 times, and then finally we start moving to the upside. I have no real opinion in terms of OJ until we get back to support. Ags. Oats, I'm looking to see. Well, you can see what I'm looking for in oats. It's no different from what I was looking for in terms of lumber, where okay, we see a flush below the line. I want to see if we can get back up above it for it to become support. So if I get all the circles out of the way, you can see that that's pretty much what we're in the middle of hopefully doing. We've seen a move back to the upside. I will not watch now to see if this becomes support around 27.10. Corn, I'm bearish. I've been bearish corn since Fred Flintstone was a teenager. I mean, a long time. I've been bearish corn. I mean, it's not difficult to see why. Look at the line of support / resistance. I mean, it's kind of not too difficult to see why I'm bearish corn. Down we go. Now look, more recently, support becomes, well, resistance. Shocker. Down we go. So you'd probably think to yourself, I bet you're short corn, Paul. No, I'm not. Why am I not short? Well, here's the thing. I've been watching for about the last 2 months for resistance along this particular line. We tag it once, fell away. Tag it twice, fell away. My real problem with corn is this. Do I think it's going to go lower? Yeah. The problem is my risk reward. Look at the left, look at the low, look at the low, look at the low. So the problem I'm seeing here in terms of corn is a little bit like the whole Canadian dollar Swiss franc situation we talked about earlier, which is your RR is going against you. So yeah, okay, now we've fallen through that support. I probably would now watch for a bit more resistance up in this area here. I remain bearish corn. I'm just not short corn. I still think it's going to go lower. Soybeans, I'm watching to see where we run into support for soybeans. I'm still looking for a move potentially up to about 1050 on the smaller time frame. We actually have resistance once, twice, 3 times. We breached to the upside, and I drew in this green line here this morning, watching to see where we're going to see resistance in soybeans. Hasn't worked. Obvious place next to watch for support in soybeans is around 958. Wheat, still watching for support, pretty much where we are right now. I've been, even since back here, in fact, I called resistance in this area here, said that I thought we'd see a move down to about the sort of like 4170 area. We tagged it. Look at the bullish close. Look at the bullish close. Watch wheat. I'm watching wheat for a potential move back to the upside. Live cattle, feeder cattle, lean hogs. There's not too much to talk about there, so I'm going to leave those alone for right now. What have I not covered? I think I've covered pretty much everything I wanted to cover. E-mini S&P, and then we'll wrap it up. And by the way, there's dollar index at the low. So the euro has very likely now taken out resistance to the upside on that 240. If gold is still at 1278, bearing in mind what the dollar index is doing, and let's look at treasuries, and treasuries are close to the high of the day. If gold is still at 1278 right now, where is it? 1280. All right, to be fair, I was going to say, if we're still at 1278 in gold, I mean, that would not be good. I still think gold's going to take out 1281 to the upside based upon what we're seeing on the daily chart. But until we get through 1281, I'm on the sidelines. E-mini S&P. So, E-mini S&P. I've got an uptrending slope in the E-mini S&P. The line I'm really focused on is this one right here. Resistance, resistance, resistance. And look, you can see back here, I was looking for resistance. We breached the line, and then I start saying, well, okay, now I'll look for it to become support. We come 1.5 points from the line, see a little bit of a flush, and for me that is the key line. And what I've said this morning is this: until we take out 2560 to the downside, I remain bullish E-mini S&P or US equities generally, and as far as I'm concerned, any pullback is simply an opportunity to get long. I'm going to put that line back in. Okay, this is a line that I was paying attention to this morning as well, 2568. That's messy, but look, better bounce, better bounce, better bounce. Watch the close on this bar. I see nothing bearish in E-mini S&P. The problem I've got in E-mini S&P right now is simply this. We don't seem to have proper direction. If I draw in a line, something like that, and maybe something like that, to me, this is all that's going on in ES right now. We're kind of just like chopping sideways. And you can see that every dip to the downside quickly reverses higher. Quickly reverses higher. And, well, we'll wait and see. We're only in the middle of the dip right now, but let's see if it quickly reverses higher. As far as I'm concerned, this is a vehicle you cannot keep down. Until we take out 2560 to the downside in this area right here, I see nothing bearish in E-mini S&P. The only thing that would make me start to look for a breach of 2560 to the downside is if I see the Japanese yen south of 112.95. Hopefully you remember that. which is there. Actually, it's that one there. It's down in this area here. 112. There you go. 112.95. Let me draw it in. There it is. 112.95. That would make me a lot more nervous. And if we see treasuries, so if we see the 30-year, which to me is inversely correlated to US equities, if we start seeing treasuries start taking out resistance up in this area here. So if we start taking out 155 to the upside in treasuries, and if we start taking out 112.95 to the downside in the yen, at that point I'll become a lot more nervous US equities. But until then, well, think about it. You've got... Let's go back to where were we just a second ago. Apologies, I'm kind of losing track. There you go. Japanese yen, we're kind of pretty much at support right now. So I'm going to be watching to see whether the yen sees a bit of a bounce from here. But equally, I'll be watching E-mini S&P to see whether the E-mini S&P closes bullish. I'm not looking for any specific support until we get down to 25.60 because I just think the ES is a mess. Look at ES over about the last, 2-3 weeks? It's just a sideways mess with lots of spikes. It's like an EKG. So there you go. Was this a useful webinar? I hope so. And for those of you wondering, well, when's he going to do the hard sell or the promotional bit? There isn't one. There you go. That was it. There isn't one. I've got no special offers, nothing I'm trying to push. No, I'm not trying to sell a book. I just wanted to do a public webinar. I haven't done one in quite some time. I'm going to be doing another one in, I don't know, I'll probably be doing another one in about 2 or 3 weeks, but it's going to look a lot different because it's going to be talking about something that I personally use and we've got a number of members that use, which is my automation software. So we're going to be talking about automating the trades. So for example, let's go back to the currencies. So for example, getting long, for example, in this area here, and trailing your stop in an automated fashion up into this area here. And even though we're pushing through resistance, personally, I would have actually got profit taken off in this area here, at least 50% off, or maybe trailing the remainder. So I'm going to be talking a bit about how I've automated within NinjaTrader all of my trading. Okay, we'll talk about that in about 2 to 3 weeks. As of right now, looks like we're seeing the potential, and I say potential. This is not an upside breach. This is not an upside breach. Look to the left. We have the potential for an upside breach in the euro, and my guess is the Swiss franc is working its way ever closer to support down in this area here. So until we see a change of behavior there, nothing has changed. Gold is back at 1281. Looks like we have the potential for a breach there. Again, I personally think that this action here is an aberration. I think this is an aberration. I think gold belongs up in this area here, and what we're seeing is a spike lower, and we're going to reverse back up into the 1280s. That's what I think is going on in gold. Guys, I'm just like wittering on now. We're approaching an hour, so I'm just going to call it a day. Again, I hope this was useful. Randall says, the fastest hour on the internet. There you go. Well, the good news with the recording is you can probably play it back at like 0.5 or 0.75x, so that I speak a bit slower. So apologies if I was speaking a bit too quickly, but we've covered a lot of ground in 55 minutes. I will leave it at that. Everyone that's in here or has registered will get a link to a recording, so you can actually maybe go back over it over a coffee over the weekend. But I'll do another one in a few weeks, and we'll talk about the automation a bit. You all have a great afternoon. Take care. And for those of you that are members, I'm going to pop into chat for the next few minutes and see if there are any additional questions. You all take care. Bye-bye.